check out this Bitcoin over the course of the past month, fighting hard to make some kind of a recovery after what's been, as Kate points out, a very volatile summer, certainly from the highs that we saw last November. So here to help us dig deeper into Bitcoin's recent strength and how it kind of plays into the overall meme stock narrative and that story is Espresso Systems co-founder Jill Gunter, also Mark Yusko, Morgan Creek Capital Management Chief Executive Officer. Jill and Mark, thank you guys very much both for being here. Jill, perhaps I'll start with you. You know, Kate's report kind of points out just what we kind of intuitively feel, right? That since Bitcoin has come off those highs significantly, the interest has also dried up. So is it now truly still part of this kind of retail trading landscape, so to speak?
It absolutely is. And, you know, this is very much expected to those of us who've been through these highs and lows in crypto markets and in Bitcoin specifically before. You know, as it goes higher, retail interest waxes, and as it goes lower, it wanes. And it's as much a follower of the price trend as it is a driver of it. And so it's totally unsurprising to me that we're seeing this dynamic now. That doesn't mean that it's retreated from being a part of the landscape. Retail has always been important to the crypto markets. Retail saw it first before the institutions had the guts to get in, and retail is going to stick around in it through the highs and lows, even as I say, if it waxes and wanes.
So Mark, I mean, if you look at the retail side of things, from your standpoint, they are certainly, as Jill points out, a big part of the story behind the rise and maybe even the fall of Bitcoin so far. From an institutional manager standpoint, do you feel as though this is someplace that you still want to be, given what we've seen from a macro big picture narrative with inflation, with kind of like the Fed and its tightening regime, interest rates and everything else? Is this still someplace that retail should want to be?
Yeah, absolutely, Dominic. This is an asset that every investor must have in their portfolio. Bitcoin is the best performing asset over 2 years, over 3 years, over 5 years, over 10 years, and over the life of its existence, all 14 years. And you have to have some exposure in the portfolio. It's extremely volatile. Well, why is it so volatile? Volatility isn't your enemy. It is just an indication of uncertainty and disagreement over future prospects. And I think there are a lot of people who are maybe less educated about what Bitcoin is, what blockchain technology really is. And so when they see the price volatility, they run away, as Jill mentioned. And I think what we're seeing now is we were in crypto winter. I believe that ended the middle of June. We're in crypto spring. That'll be a volatile period with an upward bias. And then we'll go back to another crypto summer when the retail traders will flood in and buy at higher prices. One thing about this asset is it is the best performing asset over all of those periods. Had you just put 1% in a portfolio, you would have outperformed the 60-40 over the last 5 years by 250 basis points. But people are afraid of volatility. So we actually launched an ETF called CRYP, where we use cash to mitigate downside volatility in the drawdowns and then get fully invested in the spring and summer periods like we're in today.
So it's interesting, Jill, I mean, we've just got a few moments left here. I wonder, you were both obviously very bullish on the crypto story and everything else with regard to the retail trader involvement. Jill, I want to give you the last word here. It can't all be sunshine, lollipops, and rainbows, though. What's the biggest fear that crypto investors should have as you approach kind of like this crypto winter that we've seen and what could ultimately be the end of the year?
Look, yeah, as we go into crypto spring, as Mark called it, we're going to continue to see choppiness. I would be aware of the long tail of altcoins and assets that might have less liquidity, that might have long institutional investor lockups that are coming undone. So keep an eye on those dynamics in specific single name cryptocurrencies and coins. But more broadly than that, the regulatory landscape. You know, just this week, we've seen the Treasury sanction the Treasury Department and OFAC sanction actual code, smart contract code. This is something that has never happened before. They've only ever sanctioned individuals and entities. That's both a sign that crypto is being taken seriously on the world stage, but is also something that everyone should be paying very close attention to. The SEC is not the only game in town that we need to be looking at in terms of the risks posed on a very existential level to cryptocurrency and, frankly, a lot of what it stands for in terms of our rights and privacy as well.